That's where she got it from, and she also declared it. And here's it on a tax return reconciled back to a tax. It sounds, you might sit there thinking, Nico, you must be losing your mind. That is insane. Hello people, and welcome to this session on tax dispute resolution procedural law. I want to discuss some of the basics of the procedural law that govern tax dispute resolution, particularly in light of a recent judgment from the Western Cape Tax Court, Dr. X and Dr. X's practice versus SARS. So really it takes you back to basics, right? And it starts with Rule 7.2. So Rule 7.2 is the rule that governs objections. It says what must go into the objection and the extent of the stuff that you must add and say in that objection. And this is the first, at least to my knowledge, the first case where the tax court really looks into detail in terms of Rule 7. And so, given the judgment was handed down, I think it's important that we touch base, because most of us know Rule 7. You might not know the details of Rule 7 because you don't look at it necessarily technically, but you know you have to file the ADR1 or the NOA form or whatever the form, NOO form. And you know there's 80 days and those sorts of things, but there's nuances in this rule that I think most people have overlooked or have not paid sufficient attention to, and this Dr. X case has just brought it to the fore. So the starting point for this discussion really is Rule 7, right? So Rule 7 of the tax court rules, 7.1 simply says that you may, if you're entitled to object to an assessment which is regulated by Section 104, then you must do so within 80 days, and I think we all know that, everybody knows that. And then it goes on in Rule 7.2, and these are the things so it says these are the things you must comply with, right, to submit what is a valid objection, right? It says you must complete the prescribed form, which we all know what that is, and then it says set out the grounds of the objection in detail, including specifying the part or specific amount of the disputed assessment objecting to. So it says set out the grounds of objection in detail, right? So what is grounds for objection, right? And goes on to say you must specify the amount of the disputed assessment objected to. So right, so there's two things here that we need to just pull apart from this provision, right? It says grounds for objection and then the amount of the disputed assessment, right? And the fact that you're objecting to an assessment, right? So what does grounds for objection mean? So grounds for objection means the facts and the law on which you base your grievance with SARS's assessment, because to object to Section 104 says you must be aggrieved by the assessment. So you're aggrieved, Section 104 says you're aggrieved, or if you're aggrieved, doesn't say you're aggrieved. So if you are aggrieved, then you may lodge an objection, but you must set up, and then Rule 7 says you must set up the grounds for objection. So the case here that comes to mind is the trustees of the CC Trust and others versus SARS. All the cases that I'm citing are fully, noting here, are fully cited in the article that I wrote. You can access it on my website. Where the court looked into, granted it was what is the meaning of grounds for assessment, in Section 42 of the TAA. So Section 42 deals with the provision that if SARS does an audit and they want to raise an assessment, they must, before they raise the assessment, upon conclusion of the audit, give you a letter of audit findings to which you must then respond, right? And it says, Section 42 says that in that letter, in that finalization of no findings letter, in that findings letter, SARS must put out the grounds for their proposed assessment. And the issue in today's trustees was whether or not, when SARS issues those letters of audit findings, whether there should be amounts in it. But in getting to the conclusion that there shouldn't necessarily be amounts, I've got a whole article on that also, which you can find on my website. It's not necessarily that there's amounts, but there must be at least the facts and the law. Now, grounds for objection will then be the facts and the law. And when I say that, there are two things that I'm saying, and people tend to put them together as if it's one thing. You must, in your objection, you must put out the facts and the law. It's the facts, one thing, and the law. And then naturally the application of the facts to the law to come to the conclusion that you disagree with SARS's assessment. But oftentimes when I'm asked to review objections, people are not necessarily familiar with drafting objections and the amount of detail that nowadays are required. There will be a bunch of facts in there, but there's not a single section referenced or a single piece of law referenced. Now, technically speaking, that's a breach of Rule 7.2. Now, historically, or not too long ago, those things would not have any issues. SARS would kind of allow them to go through, because not all taxpayers are tax professionals or know tax law necessarily all that well, let alone the tax procedural law, right? But this is becoming more and more important. But certainly nowadays we are seeing that the facts in the law must be there, because if the facts in the law are not there, that's a breach of Rule 7.2, which in terms of Rule 7.4 means SARS can then invalidate the objection. What that means is it means that the objection is not decided, right? There's no yes or no answer. It's just I'm ignoring the thing for want of compliance with the rules. So I'm not looking at it. Yes, you can then file in terms of Rule 7, I think it's 5, you can then file a new one or 4. But that's not the point. The point is to get it right the first time around, because time is money, right? Also, there does become a point where it really becomes problematic if your objections are invalidated. Right, so the grounds for objection, the facts and the law. It is not, like I explained elsewhere, when you draft an objection, people tend to think that when you put in the law and the facts, it's just a waste of time, and it's really overly complicating things. It's not overly complicating things. There's a requirement in the law that you specify in detail. And I'll tell you how this is read. I'm not making all of this up. It's actually in the rules. And then also I want to show you an example in the Dr. X case as to how the court applied it, right? So then it goes on to say, specifying the part or specific amount of the disputed assessment objected to. Right, so your facts and your law must be in relation to the assessment that you're placing under dispute. And there's a common misunderstanding about the meaning of the word assessment, right? Most people still today think, in my experience at least, it seems, I should say, of course I don't know, but it seems that most people think that an assessment is that document that SARS issues, the ITA 34 in the case of income tax, or the VAT 217 in the case of VAT, or the EMP 217. That document is a notice of assessment, right? And in that notice of assessment, which is regulated by Section 96 of the TA, the notice. But in that notice of assessment, there are several determinations or assessments, if you will. So the notice simply contains a summary, if you will, of the various determinations or assessments that SARS had made in that assessment or notice of assessment. And when you are objecting, and that's where you'll see the NO4 makes you tick amounts, right? It makes you say, I'm put out, if you go on e-filing, did I say the NOO? I mean the NOO. The NOA does the same thing, right? I think. So if you do the NOO, there's the reason why you must tick the amounts is because you are identifying the assessments that you are objecting to. That argument that you're objecting to the entire assessment doesn't work. There's a court case which, for the life of me, I can't remember right now. I can't remember. I think it's SA Custodial Services. No, it's HR Computech. That's the one. HR Computech versus SARS. You can't be saying no, I object to the entire thing. So it's important that when you formulate an objection, you must understand that, okay, what determination in this notice, if you will, what determination, what amount in this notice am I objecting to, right? And you must specify that. And then you must specify in detail the facts and the law on which you are basing, or grounds on which you are basing your dispute against that particular amount. And that you must do for each and every single amount that you are placing under objection. That was confirmed in the taxpayer versus South African Revenue Services versus taxpayer M, or M, I think it is. Again, all the citations except for the HR Computech one is in the article, which you'll find on my website, and for those of you who want to read it. Right, so this is critically important because for many reasons, right? If you go through objection, and let's say you comply with 7.2, we'll go through some of the other requirements now. Let's say you go through the objection process and the objection gets disallowed, now you go on appeal, right? And now on appeal, the issue is, and typically that's where taxpayers thought, or where most people thought, well, hang on, if we're going on appeal, now I actually need to rope in the dispute resolution expert because now it's an issue. You see, before appeal, it seems most people are thinking of disputes as if they are kind of compliance oriented, and indeed to a large extent so does SARS, or used to. But nowadays are putting more and more focus on the objection phase to get that right, and I think that's going to get even worse with the introduction. Oh, I say worse, but I don't mean worse necessarily worse. It's just going to get more, I think, intense once the ADR process is introduced into the objection system, which they said they are going to do. Right, so you must specify the detail, the grounds, the facts and the law for each amount. If you don't, it's non-compliance with Rule 7.2, right? And then indeed SARS can, and as they did, in fact, in Dr. X's case, and correctly so, according to the tax court, reject or invalidate, I said reject, invalidate I almost said VDP, invalidate the objection. Right. It must specify the grounds of assessment that you are disputing. So grounds of assessment are the facts and the law. So you must say, what is the facts and the law that you are relying on to say that amount is not taxable, or is exempt from VAT, or is zero rated, or is not subject to PAYE, or is not a fringe benefit, or whatever the tax type is. Why is it that, on what facts and what law are you basing your case? And then you must, in addition to that, it says here, and it's been saying this for many years, it's not new, it's just the courts are now enforcing it, or at least SARS seems to be enforcing it. You must specify which of the grounds for assessment you are disputing. So what are you disputing of SARS's assessment, right? On what facts in the law? So on what facts that SARS has in their finalization letter do you disagree with, or is it do you agree with the facts but you disagree with the interpretation of the law? And this must be set out in detail in the according to this tax court judgment, which of course can be taken on appeal, and the court might a higher court might take a different view. But it seems. And whilst I have reservations about the judgment in the Dr. X case, that's not the point. I'm not saying in the Dr. X case the text, I agree necessarily with the court. I'm using it I'll use it later as an example to describe that I'm not making this up, right? This is really what the rules say, right? And then you've got Rule 72B3, which says, in addition to now specifying the grounds for that particular amount and the grounds on which you disagree with SARS assessment, you must submit the documents required to substantiate your objection, right? You must add these documents required to substantiate, and really in the Dr. X case, the court takes an objective approach to the interpretation of that, in the sense that the court says you can't determine substantiating documents that must be added based on what the taxpayer believes substantiates the grounds for objection. It is a question of objectively what substantiates the grounds for objection. And I don't want to say too much about it because I have slight reservations with the court's conclusion for exactly the same reason that counsel for the taxpayer argued in that case, and as also explained in my book, the Tax Dispute Resolution book. I have some reservations about it, but there is some merit to it in the sense that you can't not add anything subject to an exception, which I'll discuss later. From an interpretation perspective, I think it's important to understand. So most of you know that there are rules that govern dispute resolution, I suspect, right? We all know that you must file the form and it must go in, but there's actually a set of rules that sets out what must go in there. It's not a preference. It's not a question of how does that firm do it and how does that one do it. Sure, I guess in terms of layout and how you present it, there could be a little bit of a preference, but ultimately, all those things, all these things must be in there, the grounds, the facts and the law, right? And don't confuse the two things, right? The facts and the law, they're not the same. Right, it must be in there. Right. So now we go one step further. Right, and we look at Section 102. Right, and I'll pull all of this together with the Dr. X case. So Section 102 of the TAA. Right, if you go and read Section 102, I'm not going to read it. I kind of know it off by heart, which is somewhat sad, I suppose. But Section 102 says, in particular, Section 102 sub 2 says that SARS carries the burden of proving that if they raise an estimated assessment. In terms of Section 95, they have the burden of proving the estimated assessment is reasonable. Not correct, reasonable. It's important to understand, right? So SARS bears the burden of proving that the estimated assessment is reasonable, and also SARS carries the burden of proving the facts on which they rely for the USP understatement penalty imposition. Right? It's also tried law that SARS, for example, carries the burden of proving that they can lift the veil of prescription. So I'm telling you all of this because it does become quite relevant in terms of how we interpret Rule 7.2, especially where it is SARS that carries the burden of proof, right? And how we must deal with these things and what SARS can invalidate. And I'll talk about that a little bit later. Right. So let's just park for now those areas where SARS carries the burden of proof, right? When, in my view, when a taxpayer carries the burden of proof, then the amount of detail that I'm discussing here, I can read Section or Rule 7.2 as saying exactly, to a large extent, I agree with what the court says in Dr. X, to say, well, yeah, you must specify in detail, right? You specify in detail the grounds and the amounts that you're objecting to. Then it must be there because ultimately you carry the burden of proof. And I understand, right? Believe me, I understand that it's annoying And I understand, and something that people must I think, just realize is that the legislator, I'm not saying I agree with it, I'm just saying that's the facts, right? The legislator made it easier for SARS to raise an assessment than it is for taxpayer to dispute the assessment, right? You have to discharge your onus of proof, and in doing that, you must do an objection in this amount of detail and attach the documents to substantiate, etc., right? Where SARS raises an assessment, you look at section 92, the courts have on numerous occasions said that SARS need form only a subjective opinion on reasonable grounds that whatever is already assessed, right? I'm talking about additional assessments. Whatever is originally assessed in the original is wrong. Then they can raise an additional assessment. They don't need to prove the additional assessment unless they have to prove the reasonableness or the facts on which they rely for the USP, or that they can lift the veil of prescription. They don't need to prove it. They just need to form a subjective opinion on reasonable grounds. It can't be completely arbitrary. Of course, it has to be based on something. They can't just, and that's what the court said in Pretoria East Motors, where the court said even though the taxpayer carries the burden of proof, SARS must at least have proper grounds for raising an assessment. They can't just, like they did in Pretoria East with Mrs. McKenzie of SARS, I will never stop saying it, right? Pretoria East Motors is quite old, but I'll never stop saying it. If I remember the auditor's name correctly, it was quoted in the judgment. The court said, well, Charles, you can't just say, well, you know what, I don't understand what the taxpayer's business is like. I really don't understand these accounting records. It's confusing. You know what, I'll just disallow everything or make my assessment, and then you can come more smart and prove me wrong in due course when you go and lodge an objection, because you must do all of these things and specify in detail and all sorts of things. And the court said, no. That's not quite how it works. SARS, you must at least have proper grounds. Right. So this is important, and I think this strict interpretation, I tend to agree with respect, to a large extent, with the court in Dr. X, who say, well, you must specify in detail if you carry the burden of proof, right? So when, however, it is the taxpayer that carries the burden of, SARS that carries the burden of proof, I think one must be careful with the extent to which you require of taxpayers to specify things in detail. I think there's a disjunction there, something the court, it seems with respect, it seems like it was raised, to be fair. I think counsel did raise this issue but SARS actually carries the burden of proof in the Dr. X case. But let me explain this interpretation of Rule 7 with some facts, which I borrow from the Dr. X versus SARS case. Judgment was handed down, for those of you interested, I think 2 December last year, but again, I do reference it in my article. So the SARS did an audit, right, naturally, ultimately raising assessments, right? Now, it's important to note already that some of the assessments were estimated assessments in terms of Section 95. The taxpayer had objected and raised a defense on prescription, and there was USPs imposed. And the reason I say that is just to point out that I'm going to deal with those instances where SARS carried the burden of proof, but that wasn't all the assessments. It seems there were other assessments that are not estimated assessments and that are not USPs, and where the issue of prescription is not involved. So a bit of a mixture of things. But just to explain with some form of example, which I think is great, and again, I'm not saying there was something wrong with the case, the way the objection was dealt with necessarily in Dr. X. I'm using it as an example, right? So the issues here, SARS raised assessments to donations tax in respect to certain donations the taxpayer made. So now the taxpayer objects, and remember, you're thinking Rule 7.2b must be complied with. So the grounds for the taxpayer's objection is this. The taxpayer's objection was as follows: the donations are exempt under Section 56.2c of the Income Tax Act, and I'm paraphrasing, because they, and I'm reading from my article in which I paraphrase, because they relate to payments made to the taxpayer's son, who is a full-time student, but they don't give any evidence. So you can see here, if you read Rule 7.2b, it says you must specify or set out the grounds of objection in detail, including specifying. Set out the grounds for objection in detail. Grounds being the facts and the law, right? So here there's a statement of fact. Clearly, so 56.2c is I think it's for the bona fide maintenance. Then if you make donations for the bona fide maintenance of a dependent, then it's exempt from donations tax, right? So here is a factual statement, right? It is for the maintenance of my son. That's a factual statement. And in terms of the law, it's exempt. So that's the facts and the law. So that looks, when you read it, it says that you must have the grounds for objection, the facts of the law, it's there. But there was no evidence provided, right? Which gets you to sub-rule 3b that says you must submit the documents required to substantiate your grounds for objection. And because there was no evidence, right? The court said, well, you make a factual statement. There's a big difference between making a fact, and I've said this many times, I think I say it in this article again. There's a big difference between making a factual statement and proving it. And there's an issue in that also that I see in practice when it comes to proving and when it becomes an issue of evidence. Often I see that the tax practitioner or the accountant or the lawyer or whoever it is that's working on the case or assisting the taxpayer, and even taxpayers themselves sometimes, they are too close to the facts. And so they tend to accept a document or a piece of paper or a statement as fact or as evidence when it's not. Or it is, but it only goes that far. And I can have a whole discussion about what it is you need to prove, because I also often see people are making statements, factual statements, and giving evidence in support of those factual statements, which is completely irrelevant to the issue in dispute, right? It is not relevant to the issue in dispute. It is interesting, but not relevant, right? So we can have, if there's enough interest, we'll have a discussion about identifying evidence for the purposes of an objection, right? But the point is there's no evidence, and that's a breach of Rule 7.2b3. And one can even go as far as to say that the factual statement is not detailed. Where is this person's son? Where is this guy studying? At what university? Etc., etc. I'll talk about how one could fix it. And again, I'm not saying the way I suggest it should be fixed is to explain that is a foolproof way of doing it. I'm using it as an example to illustrate the point and the technicality of Rule 7.2b. So there's the donations tax thing, right? Taxpayer gives no evidence for the son, they say, but there's no evidence. Then SARS raised a couple of income tax assessment based on unexplained deposits. Right, I've got lots of things on deposits and bank accounts, videos everywhere, right, about me and deposits and bank accounts and VDP and verifications. You can go and find those. I think they're on TikTok or my website or LinkedIn. I can't remember. For those of you interested, right? But SARS says, okay, if you've got these deposits, I'm going to tax these deposits. And what's important to understand, I know how this goes, right? And I'm sure some of you listening to this also know. SARS will say, because remember, I've got an article, it's low-hanging fruit, I think it's called. So SARS has third-party data, and the third-party data shows them the total of deposits into a taxpayer's bank account, right? It doesn't show the breakdown, as far as my knowledge goes. It shows the total deposits, right? And so they go and they say, okay, well, these are all the deposits based on this third-party data. There's R1 million that was deposited into this account. It comprises of, call it 17 transactions, right? But they see R1 million in this account, 2 in that one, 300,000 Rand in this account, and so on. So they see the total, right? And they go, well, you must explain these amounts, because when I compare what is in your tax return to all these deposits, it seems you've underdeclared your income, and that's typically how they do it. And so now they ask taxpayers to explain, why these amounts ought not to be taxable, because clearly they've received. Now think about gross income. Think about proper grounds or grounds for an assessment. SARS looks at your bank statements, and I'm not defending them, I'm just explaining a mindset, right? And like I always explain to people, from a strategy perspective, dispute resolution is all we do, but from a strategy perspective and VDPs, is you need to understand the other person's understanding. If you want to have any chance of changing someone's mind, it's the same with teaching, right? If you don't understand what that person is not understanding, or the way that person is understanding it, trying to teach or trying to change their mind is very, very difficult, because there's miscommunication, right? So the way SARS looks at it says, well, it's received. It's clearly, you look at the definition of gross income, it says any amount received or accrued, these amounts are clearly received. It says there, your bank account. And I know, sometimes one wants to ask the question, but obviously, for lighter content, you can look at my TikTok, right? But this is a little bit more formal. So I know that there's often, one would think, you would think common sense to go, but clearly those are inter-account transfers, clearly this and clearly that. I know, right? Let's not go there, right? The reality is they see the receipt, so they say explain. Now, what the taxpayer does in Dr. X's case, and I'm using this as an example, I haven't seen, in defense of the guys who helped the taxpayer in this case, I haven't seen the objection. I've only read the judgment, so I can only, and of course the judge, I don't think, if I remember, the judge does quote from the objection, but only elements of it, so I haven't had the benefit of the full thing to see if I necessarily agree with whether or not the detail was there or not in that objection with the court. But anyway, so the taxpayer says that the objections that SARS, the amount that SARS wants to tax was previously declared as taxable elsewhere. No evidence provided. Right? Again, what is the DI? No. What is the facts and the law? The facts are that they were taxed previously. The law is there's a presumption against double tax, and you tax on the earlier of receipt or accrual, not on both, right? Or not at SARS's choice. It's the earlier of the two, and forgive me, I forget the case that supports that. It'll come back to me maybe later. Right, so now, if you want to say it was taxed earlier, those are the facts. The law is, of course, there's a case that says you can't tax it twice, and there's presumption against double tax, so that's the law. But now the facts has to be proven. You say it has been taxed before, right? And I'm assuming that I'm dealing here with a case where the taxpayer carries the burden of proof and not an estimated assessment. So you say that it's been taxed before, but there's no evidence. Right? So that's a breach of Rule 7.2. SARS can declare it invalid, and indeed the court said SARS can. There was some VAT assessment raised, also as my understanding based on bank accounts, right? Deposits into the bank account. So the way, again, think like SARS does. SARS looks at the bank account, they say there's 500,000 rands, I don't know what the numbers are, 500,000 rands in January. In your VAT return for January, you declared sales for output tax purposes of 200,000, so I'm going to tax the difference. Right? And the taxpayer's answer to that in the objection, as far as I read from the judgment in Dr. X, is, but this is invoices that were paid late, but the VAT was declared when the invoice was issued because I'm on the payments of the invoice basis for VAT. So I have declared it before, and what you're doing is you're taxing it twice. Right. The taxpayer does, in the circumstances, like I said, I haven't seen the details, but there is some evidence that they give in support of this one, right? So they say that there's a debtor's age analysis which they give, but the trouble is these debtor's age analysis contain aggregated amounts that doesn't tie back to the amounts that SARS wants to raise the VAT on, and this is crucially important, right? When you do something like this, and I've dealt with many VAT cases where the issue is, right, I see this paid now, but as you know, SARS, I'm on the invoice basis, so I've declared the VAT before. To say to SARS you've declared it before is the right idea, but it falls well short of proving that it has been declared before. I know it's annoying, believe me. I'm not trying to defend this or say it's right. I'm just saying you what the law is as it stands. Right. So now the question is, clearly there's issues with this objection as far as I can tell. So the question then I guess you'd have is, well, how do we fix it? So let's take the sons, the donations tax thing. And I'm saying this is an example. I'm not saying the suggested approach is foolproof. There are, of course, gaps in the way that I'm proposing it. And that's not necessarily the way I will deal with the case in practice, but I just chose the principle, right? So remember the issue of the donations tax and the son's deposit. So the way one could potentially deal with that is to say, well, okay, I want a copy of the kid's certificate of enrollment at this university, right? And further, I can go further. If really the onus of proof sits on me, which in the case of the donations tax, I think it did, right, in this case, but and then I'll say, okay, fine, this is my son, here's his enrollment, I'll even give his birth certificate if I really want to go over the top, which I grant you, it's on a balance of probabilities and not beyond reasonable doubt. I know, but I'm trying to avoid litigation. I'm trying to get this thing resolved before it gets to litigation, before we have issues like in this, where we need to go to court to have objections declared valid. Right, and I know that time is often also an issue, so I grant you, right. So, enrollment, certificate of enrollment, and then I will go one step further with I'll even give the certificate, the kid's birth certificate or ID or whatever it is to show that it is in fact my son, it is a dependent, and then I'll go one step further to say, well, give me the son's bank account, because clearly SARS can see the amounts going out, it can see it going somewhere, so I want to see the son's bank account, I want to see the amount coming in, right, and then I want to see how those amounts were used, and if I really wanted to, I could go one step further and get an affidavit from the son, right, which presumably, well, this is studying, so get an affidavit from the son and say, this is what I use the money for. I use it to buy a pie, or I use it to buy brandy, or whatever it is as a student does, right? So if you really want to get technical, that's technically what this thing requires, right? So, and that is typically how it goes through. And I call that a massive effort, which it is, I grant you, right? And we'll talk about why people aren't doing this in a second. Right, the income tax deposit issue. Now here is something that often falls short. I'm dealing with a case now. As I'm sitting here, there's a case that we're dealing with where it's another one of those income tax cases. I always explain it's not, these income tax deposit or bank deposit cases are not legally complicated. I mean, it's gross income, right? To get it out of gross income, you need to prove that it's either not a beneficial receipt, or it is not a receipt at all because it's a transfer between accounts. So it can't be. But the trouble you have, and it was the same thing in SARS versus taxpayer M, is people take this almost, and I say this with respect, they almost take this arrogant approach to say, well, I'm not going to go through the effort of explaining each of those deposits. And I understand. Believe me, I do. And there's some merit to that approach in the case of estimated assessments, right? We'll talk about that in a minute. But I understand that it's frustrating, but you have to go to each and every deposit, because even though SARS will say to you, the total deposits in the bank account A, for example, is $1 million, and in bank account B is $2 million, for that year of assessment, we'll tax $1 million and $2 million. You can't deal with the $1 million, if the $1 million consists of 7 or 8 or 10 deposits, or however many, you can't deal with that $1 million in your objection as a global amount. That was confirmed by the High Court, right? And then again relied on by the tax court in delivering this judgment, where the court says you have to deal with each of those amounts. You can't say to me that, oh, that 1 million rand, that global amount there, that all of that was declared earlier, and then also not give any evidence. I must see that deposit there, and the way I explain it, the way you'll do it is just like that deposit there, SARS, where that comes from. SARS says that's actually I'm using an example, that's actually a donation from my wife, and then I'll get the wife's bank statement, right? If I really carry the burden, I'll get the wife's bank statement, say, see, there's the amount going from the wife, that is my wife, here's the marriage certificate. And it sounds like I'm being ridiculous, but remember, the fact that I say it's my wife doesn't make it true, right? So I can make the statement in my objection, say, this is money that I received from my wife. Again, the way I explain it is when you are preparing evidence, right, for a dispute with SARS, take this mindset. This is my suggested mindset. I'm not saying this is the way SARS looks at everybody and all that caveats and stuff, right? So I must say these things. So it's a suggested mindset. Think for a second. The guy on the other side, the SARS oak, the auditor, he does not, or she, think like this. They do not believe a word you say. If you say, this is my wife, they're going to say, no, you're lying. Right? You're lying, you're a tax dodger, it's not true. That's the way. As soon as you kind of adopt that mindset, you kind of step back. And to be fair, they don't have the benefit that you have preparing the objection. You know it's his wife because you've met them many times before, right? You know they're married. The SARS guy, I haven't seen them. He doesn't know what even they look like, right? So think like that, and then you will, things like, for example, the thing I just said now, so give a marriage certificate, because you want to say it's donations from the wife, which clearly are exempt also from donation tax, because you think one step further, why they're going to say, well, it's donation, it's not taxable, sure, but where's the donations tax? So it's my wife, so it's a marriage certificate, and then the wife's bank statement, and I'll go one step further, right, depending on the facts, and especially if I bear the onus of proof. So it's not an estimated assessment, right? I'll say that 100 rand from the wife, if that was the number, that's where she got it from, and she also declared it. And here's it on a tax return, reconciled back to a tax. It sounds, you might sit there thinking, Nico, you must be losing your mind. That is insane. That is the extent of detail that is required where you carry the burden of proof. And I'll caveat that further to say, if you want to try and avoid disputes from going to litigation. Of all the cases we've worked on, hardly any of them get to litigation. Well, they get to litigation, but hardly any of them actually reach the court. And the reason is we deal with these things properly, because believe me, once you get to litigation, of course, sometimes it's unavoidable. It is what it is. We do get cases that go there, right? But if you deal with this properly, you can avoid it. And I know the issue is that the client is difficult, they want to give the issue, but then something that you must bear in mind is they come to you because you are a professional. And I will not let a client dictate to me the way the thing must be done. If you want to dictate to me the way I must run your case, go and find someone else. You know, there's that old saying, the most expensive lawyer is being your own lawyer. I will listen to you, naturally, right? I will listen to you because I need to understand your facts, I need to understand your circumstances, but I will not dictate to you. You will not dictate to me, I will dictate to you. Or I'll say to you, if you don't, we can do it, but if we don't do it this way, don't be surprised if we lose. All right? Happy? Then, but bear in mind, we're going to lose, or we're going to have this issue of invalidation. All right? But I get sidetracked. Oh, so deposits. So for each deposit, explain the deposit. For each one, don't deal with it on a global basis. That is not correct. And it comes back also to what is an assessment, because you're objecting to an assessment, which is each of those deposits. Right, in the VAT, the same issue with the VAT, right? Because SARS said in the Dr. X case, that said that there are deposits in the VAT account that, deposits in the bank account, which I'm going to raise VAT on because when I look at your VAT return for that period, you underdeclared VAT. And the answer was it was previously declared, and that's a valid basis. And that makes sense. That of course, you can't pay VAT twice again, the presumption against double tax and blah, whatever, and the time of supply rules, right? So I get that, but then you must prove it. And the way you would go about that, if you bear the onus of proof, and I'm talking about the USPs, and I'm not talking about prescription, and I'm not talking about the reasonableness of SARS assessment, we'll get to that now, right? If you want to prove that the VAT was previously declared, there's a case I'm dealing with now where exactly this is the issue, right? There's a couple of periods, we've won 80% of them, the others are just pending, it's just going through the system, right? I need to say to SARS that it was declared, right? Now I have to prove that it was declared. Now saying to SARS, you know, here's an aggregated amount of VAT reports and age analysis doesn't make sense. You'd have to go and say to SARS, that amount there that you see in my bank account, that 100 Rand, here's the invoice for that 100 Rand. And if it's 50 Rand, 20 Rand, 30 Rand, or whatever the different payments that relate to the same invoice, you need to quantum them or add them together and say those three payments are to that invoice. And there's a gap already in that evidence because who says that that is for that invoice? There's ways of dealing with that depending on how far you want to go, right? So that's that invoice, right? And so on that invoice, you'll see here's my VAT report for this historic period in which I say I've declared. And you look at the output VAT on that report, it agrees to the VAT return, and you'll see the detail on that output VAT, here's that invoice, it's there, right? And then I'll go one step further if I have to, right? Depending on the facts of the case. I'll say, and that invoice, by the way, we look at the turnover and the financial statements for that year, it's included in there, just to show them that you're not fudging, well, again, I'm not saying it's foolproof, let's just say you're not fudging the VAT report, because I can question that VAT report also. If I really want to get into it, I can say, but that VAT report, how must I trust that VAT report? Right, so tie that back to the financials, say that's turnover and turnover has been, and the financials have been audited. Right, of course, there becomes a point where it becomes ridiculous, right? But that's the way that you must think about it. In order to comply with what the court seems to suggest is the way that we must look at Rule 7.2. Now, like I said, I've got some reservations about the substantiating documents and the way the court looks at that. But in terms of specifying the detail and in terms of at least giving evidence, it's not so much for me a thing about 7.2.3. It's a different discussion, 7.2b3. But anyway, so the question, I guess, is that we can go on, right? The question, I guess, is if we know this, right? Well, some of us might not have known this, but if we know this, why do people still go ahead and nevertheless not go through this effort? Now, I think that, again, it comes down to one, the lack of understanding that it's easier for SARS to raise an assessment than it is for a taxpayer to dispute it. There seems to be this misunderstanding that if the logic is good enough for SARS to make the assessment, if I can just kind of turn that logic on its head, use SARS's own logic and turn it on them, then that's fine. It's not quite how it works, unfortunately. Yeah, there are instances where that will work, but that's not quite how it works, right? Right. And the second reason people don't go through this is, I appreciate very much so that what I'm saying, Rule 7.2 says, and not even me, just it's what the tax court says, is a lot of effort. It is not easy. It is difficult. It takes a hell of a lot of time. And I grant you that it's expensive. And I think that the issue is that people don't want to have to go through that process. And especially, I think, because there's a lack of consistency from SARS' side. This that I'm explaining here, you might say to me, but Nico, I file objections all the time. And they're hardly ever as detailed as you're explaining now. And I don't get issues. They get allowed or disallowed and we go and appeal or we sort it out there. It's not an issue. And the reason, and that is exactly the reason why people don't go through this effort, even though that is the requirement, right? In a strict sense, when I read the legislation, it is not enforced. Everywhere, I'll say that, right? It's not enforced everywhere. So you might have cases, and I appreciate that. You might say, but that's a lot of effort to go through, and really this auditor might not be as pedantic. This one might say it's fine, and we'll just go on, and we might be lucky without going through the effort, right? And so I understand that there is often that mentality where someone, I'll take a chance because maybe, even though that's technically what Nico says, but Nico, is full of technical stuff, so we'll just try and do it like we used to. And sometimes it goes through, and I understand and appreciate that, right? Because it's much cheaper, I'll grant you. But the trouble you have is that one case where it doesn't go through, right? Then the question comes up, well, as a tax professional, you should know that this is the rules. And that's when it turns on you, right? It turns on you, and the client comes to you and says, but you should have known the law. Now you're saying to me, but you took a chance. That's unprofessional conduct. That's next. You're going to say, but it's SARS, and the client's going to say, I don't care. Right? I know. Believe me. I know. Right. So I think that's part of the reason is this inconsistency. But I think that'll get better because it seems to be improving. I do see that SARS are getting a little bit more technical sooner, and they are enforcing it a little bit earlier at objection level nowadays and dealing with these invalidity issues. I think that it will get better, but like I say, I mean, I think it was one of the guys on LinkedIn, because I had a post of the article on LinkedIn that said, but Nico, did you not think that sometimes this level of technicality that you're discussing and the level of detail, don't you think that I think that was the gist of his point, is don't you see the enforcement really taking place where the quantum is higher? And although I would like to believe that that's not the case, I'm also aware that we don't live in utopia. So I do believe that there are instances where the technical rules kind of are applied a little bit more, where there's a lot of money involved because they're trying to protect the fiscus's pockets, which is their job, to be fair, right? But now the issue I have is that creates a bunch of uncertainty. And I have a whole a video on VDP, a short one, about VDP on TikTok, I think, about this issue where you can see there's a policy to say, well, we'll be technical where there's, I'm not saying that is the policy, I'm speculating, right? And based on my experience, not complete speculation. So it seems like where there's large amounts of money involved, then we'll go kind of strict, apply the law to the letter, and where it's small amounts and the taxpayer is not a big taxpayer, then we kind of, it's okay, we'll kind of let it go. It seems like that's the case. The trouble is what's that number? You know, for us practicing tax law, and the clients that need to pay us to do these things, what's that number so I can know? So I don't have to waste my client's time spending weeks preparing an objection when you're just going to ignore most of the documents anyway because you don't feel like taking a strict approach on that day or on that case. I mean, that can't be. So the way that you're forced to look at it to say, well, I have to apply with the law always because who knows what SARS will do, you know? And that is the safest route also because then you always comply. Right. But now, let's get down to where SARS carries the burden of proof, because I've made all of these statements now, and I've always, the whole time I've been caveating it to say, well, this is my kind of take on Rule 7.2, where the taxpayer carries the burden of proof, because I do think that when you read Rule 7.2, that's what it looks like. But the issue comes in as if SARS carries the burden of proof. And in this case, there were estimated assessments that SARS raised, so Section 95, where they carry the burden of proving is reasonable. There was understatement penalties imposed, where SARS carries the burden of proving the facts on which they relied to impose that, and the taxpayer raised the defence on prescription, which means that SARS carries the burden of proving that they could have lifted the veil of prescription. Now, in this case, it seems there was a combination of things where the taxpayer carried the burden and where SARS carried the burden. And I don't think that there was a proper distinction drawn between the interpretation and the way we should adopt the application of Rule 7 to be in practice where SARS carries the burden. And let me explain by way of an example. Right, let's take the deposits into bank accounts, which is typically, or at least in my experience, done by way of estimated assessments. Right, and let's say they look at a taxpayer, taxpayer A, and taxpayer A has got R1 million in bank account A, and then you can see the R1 million goes from A to B, from B to C, C to D, E to F, and so on and so forth. And so let's say there were eight bank accounts in that particular year. I'm using an example. You can see that it's the same amount that's moved from one account to the other, which taxpayers tend to do when they're looking for a bank with the highest interest rate, right? Of course, 8 might be a little bit of an exaggeration. I'm just using an example, right? But now SARS goes and says, I'm going to raise an estimated assessment because you've received R8 million, which, and you've only declared R1,000 in your tax return. So here's an assessment for the difference on an estimate. Now that, you know, again, circumstances dependent, is not reasonable, right? And remember, I appreciate the fact that there's a difference between proving reasonableness and proving correctness, I grant you, but I don't even think that's reasonable, right? So now the taxpayer objects, so now we go back to Rule 7.2. So let's say the taxpayer follows the first requesting a reduced assessment in terms of 93.1F and 95.6, and SARS says no, right? I would have said something else on a different platform, right? So SARS says no. Now the taxpayer goes and objects. So now we go and we read Rule 7.2 as Dr. X's case suggests, and as indeed the rules say, right? It says you specify the amounts of objection in detail, including blah, blah, blah. So now the court seems to suggest in Dr. X, I must now prove effectively that the deposits are not taxable. So I must take this kind of approach that I've explained earlier, where you carry the burden of proof, which you do if it's not an estimated assessment, right? So now, what does that mean? It means you're effectively undoing Section 1022, you're reversing the onus. And what you're saying is if the taxpayer can't or doesn't accept that, then effectively SARS can invalidate the objection, which means nobody can ever hold SARS accountable on whether they can discharge the onus of proof. And that interpretation is absurd, in my view, respectfully, right? So I have a little bit of a caveat and a little bit of reservations on the judgment. I think that where SARS carries the burden of proof, you know, why can't the taxpayer, like a criminal can, in criminal proceedings, take what we call a guilty man's defense? Because remember, in criminal matters, it's the state carries the burden of proving the taxpayer, well, probably is a taxpayer, but proving the person, you know, guilty of whatever offence it is that they do. And so where SARS carries the burden of proof, so you can take, why can't we take the guilty man's defense and say, well, look, I can now go through this exercise, right? It's an estimated assessment that you've raised, SARS, which really is rather unreasonable. Why can't the taxpayer in those circumstances, I'm not saying that's what you should do, not at all, right? By any stretch, I'm trying to get to a point, or trying to make a point. Why can't the taxpayer in those circumstances say, like I've explained with the 8 million rand, just simply say, well, SARS, here's an objection, I filed the NO form, you are put to proof, SARS, because there's no way that you can discharge the burden of proof. And I can tell you that I've done that in litigation matters. Of course, when it gets to litigation, and I understand that's a different rule, right? I'm not stupid. I understand that's a different rule, right? Where we would say, well, you know, you can't prove prescription. I know you can't be put to proof. That's what I'll plead. Why can't I do that in the objection? Why must I effectively do SARS's work for them in the case where they carry the burden of proof and make these detailed submissions? And I respectfully think that that's not right in the case where SARS carries the burden of proof. And like I said earlier, I'm not saying that you should take that, because it is easy to prove reasonableness. And once reasonableness is proven, then you're a street that starts with an S, because especially if you took the guilty man's defense, or what I call the guilty man's defense. Right. But the point is with that, I am respectfully, I've got reservations about that. But the point is simply this, guys. I know that most of us know, and that is the point of this session really, is just to remind you of Rule 7 and how important it actually is. And I know that historically speaking, people would typically file, you know, would go in light with an objection. It's run of the mill. It's seen as a compliance process. File the objection. There's a one-liner. Put in just the kind of one-liner and say it's not taxable, or it's not vettable, or whatever, and then you just file the thing, and you know what, you'll deal with it when the response comes out. That approach, although it certainly seems to be still kind of working, even though legally it shouldn't be, at least based on this judgment, it seems to be working for smaller amounts, whatever smaller amounts are. But when it gets to larger amounts, it is crucially important. The objection phase is crucially important. You know, the first time people were making a scene about objections and the importance of objections is when we were talking about what is new grounds and what's permissible new grounds, and making sure that you're putting all the grounds in the objection. But with the new rules that came in, I think, although still important, to make sure that you put all the amounts that you want to dispute under assessment, then you can raise any new ground later. I think this case again, this Dr. X case, just again highlights, and we'll see if it goes on appeal, we'll see what the courts say. Like I said, I think there's merit to the extent of detail that you must do where you carry the burden of proof, but where SARS carries the burden of proof, I'm not quite sure that that's right. I don't think that's the right interpretation. But to be safe and to ensure that you protect your client's interests, this is the amount of detail that you unfortunately have to deal with.